The Aussie dollar hits a 2.5-year low and could be going lower. Retail electricity prices are set to jump 35% next year. And the board of Myer and its largest shareholder set up for a stoush. It's Tuesday, the 11th of October, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Sometimes when you're putting together the show, you just think, well, what's happening to the world? There is just fear everywhere. You know, Aussie dollar electricity prices, fights in between shareholders and boardrooms. Wow, just a miserable day yesterday, really.
Well, there are 2 points I need to make on the back of this, Sean. Number one is that it gives us the opportunity to use a word like stoush.
Yeah, I was proud of that one.
It's never a bad day if you get to say that. Number two is that a bit of good news, something to look forward to, is that tomorrow there is a new episode of our new podcast, How Do They Afford That, released, which is all about saving your household a bit of money and being smarter with your money. So you've got a lot of problems today. There's a solution tomorrow.
Oh, I like it. Lots of hacks in it.
Yes, there are a lot of hacks. You're really quite hung up on that term, aren't you? The fact that we refer to tips and tricks and hacks to help with your money. You just can't get past hacks.
No, and ever since I heard it on the show last week, I had never taken notice of the word before. I can't stop hearing it. Everyone's saying hacks at the moment.
It's everywhere. It's just the way we speak these days, Sean.
I'm showing my age.
Just a little bit. But anyway, How Do They Afford That? It is out tomorrow. You can find it wherever you listen to podcasts, so make sure you hit subscribe or follow today so you get the new episode tomorrow. But Sean, you have an interview today with the co-founder of Plenti, that's Plenti, Daniel Fogo.
Yeah, so Plenti does a few things. What we really talk a lot about today is peer-to-peer lending. Plenti is the leading advocate of it in Australia, and we take it from an investor side, also from a borrower side, and it's just a great way to bring pools of money together and then on-lend it to people who need it. Really fascinating chat with Daniel.
Yeah, it's interesting. It's coming up a little bit later on. But the main story this morning, Sean, the Aussie dollar heading towards 63 US cents, the lowest level in 2.5 years. As investors desert most currencies except the US dollar, it is particularly bad news for overseas travellers, but good news for economic growth.
Yes, the local unit is suffering because people expect interest rates in the US to go higher. If you're an investor and buying a bond, shifting money into US dollars makes more sense than Aussie dollars. Also, the greenback has the added significant benefit of being the safest currency in the world. And right now, there's plenty of tension from North Korea and Taiwan across Europe into Russia and the Ukraine. Also, some pundits reckon the world is heading for a recession, and that's why they want to hold the US dollar. The casualty in all that is the Australian dollar. 6 months ago, the Aussie was trading around 76 US cents. In the couple of years before COVID, it was closer to 90 US cents. It's now down. If you take the COVID moment out in March 2020, it hasn't been this low for about 20 years.
I know I'm setting myself up here a little bit, but I would like a little bit of an economics lesson in terms of how important the currency is to the local economy.
Well, it's effectively the price of goods and services that come in and out of the country. If the dollar's worth 63 US cents and coal is selling for $300 US a tonne, let's say, then a Japanese company with US dollars is paying out fewer to buy Australian coal. So our exports become cheaper. On the other hand, if I'm buying a new television or a piece of equipment for my business from overseas, that's going to cost more. So imports get more expensive. So we're selling more of our stuff, buying less of overseas stuff. A lower currency that's sustained provides the economy with a pretty decent economic boost. That's the really good news from a relatively low currency.
Of course, though, perhaps on the flip side, it is bad news for travellers heading overseas right now.
Well, it is if they're going to the US. Who'd want to go to the US in 3 or 4 weeks' time, Michael?
Certainly not you anymore.
Yeah, that's right. Now, unfortunately, until now, the currency hasn't fallen against other currencies outside the US, but that's now starting to turn. It's depreciated sharply in the past couple of weeks against the sterling. It's also come off somewhat against the New Zealand dollar. However, against the euro, it has held up pretty well. And in fact, it's appreciated a bit in recent weeks. That's because of the energy crisis in that region. What's the upshot of that? might be time to visit Italy or France rather than US or England.
Is that what the Aylmers are doing now? Are you heading to Paris instead of New York?
No. We'll be spending our money in New York and not buying quite as much from the outlet stores.
Okay. Now, how low is this actually going to get? How low can the Aussie dollar go?
The pessimists argue it could fall to 60 US cents if a full-blown recession hits. Now, apart from the early days of COVID, the currency really hasn't been that low since January 2009, and then only very briefly. Otherwise, it was the early 2000s, and back then it fell for a short period of time under 49 US cents. But really, over the past 20 years or so, it's generally been in the 70 to 75 US cent range. If the economic outlook and the global economic outlook improves, particularly China, then the Aussie should appreciate. But as Alan Greenspan, the US Fed chair for many years, once commented, when asked about how do you tip currencies, he said, you flip a coin. In the short term, you've got as much chance of getting it right as you have flipping a coin.
All right, so not a great deal of certainty there then.
No, 50% certainty.
All right, moving on to local markets. What happened yesterday?
It was a rough day in equities. The ogre of a world recession weighed on shares. The S&P ASX 200 closed the day down 1.4% to 6,668 points, led by a sell-off in technology stocks and utilities. Michael, about 90% of stocks went backwards yesterday. The banks were all somewhere between 1.5% and 2% lower. CSL, Goodman Group and WiseTech Global all fell around 2%. REA Group tumbled more than 5%, while the gold companies also lost ground. Newcrest finished down 4%. The standout performers were the big three miners, led by Fortescue. It was up about 2%. Coles Group also ended the day in the black. In corporate news, Tabcorp added nearly 3% after announcing it will invest $33 million for a 20% equity interest in digital wagering platform Dabble Sports. It was the best performer on the day. Payments company Tyro increased its full-year guidance after a strong first quarter and progress on containing costs. Its share price jumped 1.4%, but Gold Road Resources fell 6% after reporting its gold production for the September quarter. Another interesting one is Pushpay Holdings. Now, Pushpay operates donor management systems for charities, mostly out of the US. Its share price jumped 5% after it confirmed that private equity group BGH Capital had made a $1.2 billion takeover bid.
All right, what about international markets?
We mentioned the dollar. Brent crude is down a touch, Michael. Gold is also lower, as are coal prices.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, the Financial Review is holding an energy and climate summit, and there's been some pretty confronting commentary, including that retail electricity prices could jump by 35% next year.
Yes, wholesale prices will surge as the system grapples with the transition to clean energy amid the global supply crisis. Atlanta Energy's boss, Jeff Dimery, said tariffs would rise next year a minimum of 35%. Mr. Dimery warned Australia was out of time and needed to deal with the commercial reality of investing in new wind farms and hydropower. Origin CEO Frank Calabria agreed that increases of around 35% next year were likely based on current wholesale prices. Mr. Calabria said the key challenge for Australia is no longer ambition, but that the existing system needed to operate reliably until new renewables infrastructure could be built, and that needed honest conversations about what it will cost and how long it will take.
And Sean, another to speak at the summit was Andrew Liveris, the former boss of Dow Chemicals and advisor to Donald Trump on manufacturing.
The Darwin native has become a big proponent of manufacturing in Australia. Yesterday, he said the world is going through a decade of realignment in geopolitical connectivity. In this environment, Australia should be trying to convince companies to build semiconductor chips locally. He also called for a price on carbon.
And Sean, just while we're on the subject of energy, wholesale petrol prices surged by more than 13 cents a litre in the past week.
Yes. Now, we often talk about petrol prices as a result of the oil price increasing. So we decided to have a bit of a chat today about how it all works. Now, That 13 cents a litre in the last week is on the back of much higher oil prices. CommSec estimates that the national average wholesale petrol price rose last week to about 170.7 cents a litre. Given the gross retail margin for unleaded petrol is 15 to 20 cents a litre, CommSec chief economist James Craig reckons $1.90 a litre will become a fair price for petrol. The average cost yesterday in the East Coast capitals was around $1.80 a litre, notwithstanding the full fuel excise kicking in. The bad news, though, Michael, is that Mr. James reckons prices could well end up north of that figure. So in coming weeks, we could well push beyond $2, perhaps up to $2.15 a litre.
Why is diesel still so expensive, Sean? And this is a question completely without notice, and I'm quite sure that you're not going to be able to answer it, but it's really starting to bug me.
Yes, I do not. I don't know the diesel economics, how that works. So I can't even hazard a guess.
No, that's okay. I think that's actually maybe something that I can research for us.
Yes, that'll be your homework.
Stand by tomorrow for a completely fabricated answer. Sean, defence spending is likely to come under the microscope in the upcoming federal budget, with outlays set to hit $80 billion a year by the end of the decade.
That's much more than the current figure of $50 billion a year, and in part due to the cost of nuclear-powered submarines acquired in the AUKUS agreement, also due to an increase in military personnel and support for Ukraine. According to the government, the Australian Defence Force currently has 28 major projects running behind schedule, with cumulative delays of 97 years.
Sorry, I shouldn't laugh. That is extraordinary, though.
It is extraordinary. Of course, these are incredibly long-dated contracts, but still 97 years. The government, as a result, will create an independent projects and portfolio management office within the Department of Defence to provide more oversight of major spending initiatives. A little yes minister going on here. 97
years. Entire lives will be lived before those projects are completed. That's extraordinary. Anyway, moving on. The board of Myer, we mentioned this one at the top of the show, the board has called on Solomon Lew's Premier Investments to either make a takeover bid for the company or stop buying shares.
That's right. Mr. Lew has been an active shareholder in Myer, on and off, for about 3 decades. His group Premier has been buying the maximum share allotment allowed, that's 3% every 6 months, without triggering a takeover offer. Premier currently has a nearly 23% stake in Myer. Now, the Myer chair, Joanne Stevenson, is probably fed up with it. She said the board had written to Premier about the share buying. There's another twist to it, though. Mr. Lew has said he wants a board seat on Myer, and with 23%, he's probably likely to get one. Premier nominated a guy called Terry McCartney. He's also on the board of Just Group, so I think Just Jeans. Ms. Stevenson is worried sitting on the board of Myer and Just Group would involve a conflict of interest. No doubt there. Meanwhile, while all this is happening, Myer share price has more than doubled since the middle of June, thanks to some strong sales.
Sean, Singtel says a second of its Australian companies has suffered a serious data breach, compromising sensitive details of up to 20 clients and 1,000 workers.
This, of course, comes weeks after the breach at Optus. The breach at IT services consultancy Dialog, which Singtel bought in 2020, will raise the pressure on the Singaporean tech giant. Now, Singtel said there's no evidence that the two breaches are linked.
How about this one? Aldi could be liable for millions of dollars in compensation after a federal court judge found the supermarket chain underpaid warehouse workers.
Yes, I think a lot of listeners will kind of know this story. So workers at a Sydney distribution centre were required to undertake a number of tasks before clocking on, including completing safety checks on forklifts, checking communication devices, and undertaking a group warm-up activity, according to a report in AAP. Aldi said it wasn't underpaying its workers and that employees were only expected to be ready to be in work at the start of their rostered shifts. But Judge Douglas Humphreys said he was satisfied that there was a clear implied direction that employees had to arrive early and undertake those tasks that we mentioned, and that a consistent failure to comply would lead to disciplinary action. The judge said there was no personal benefit to the employee in the activities carried on, but there was to the employer.
Moving on to overseas news now, Sean, and the Ukrainian capital of Kyiv was under attack last night with several large explosions heard in the centre of the city.
Residents reported the sound of incoming missiles, and Twitter and other social media users reported plumes of smoke rising in the centre of the Ukrainian capital. The blasts come a day after Russian President Vladimir Putin accused Ukraine of terrorism after an attack on a bridge linking Crimea to mainland Russia.
Taiwan's president, Tsai Ing-wen, has warned China against using force on her country, saying it absolutely isn't an option for the two sides of the Taiwan Strait.
Tsai said she hoped that a gradual resumption of healthy and orderly cross-strait exchanges could take place after both Taipei and Beijing lift pandemic restrictions. She said she was willing to find a new way to preserve peace. Now, Beijing is yet to respond, though previously Beijing has called her a secessionist, so it's unlikely they're going to have much sympathy for her. But the speech does define her response to China's escalated military threat for the next couple of years.
And finally, Sean, the Saudi Arabian Sovereign Wealth Fund has committed more than $2 billion to new long-term football sponsorships.
I just can't imagine the future fund throwing money at the Swans or the Hockeyroos or the Rabbitohs or someone like that.
No, I can't imagine that Peter Costello and the like would see it as a suitable investment.
No, probably not. But Saudi's Public Investment Fund said it had spent $2.3 billion in the first 8 months of this year. The fund has assets of more than $600 billion, according to the Financial Times. Now, its mandate is to pursue financial returns, but also to help develop the nation. So this is how they're interpreting that. The Public Investment Fund already owns Newcastle United in the English Premier League. It's also got a commercial arrangement with Manchester City. There's quite a few of these sovereign funds. Qatar, for example, owns Paris Saint-Germain in France. So there's quite a few of these nations in the Middle East taking interest in football teams. Incredible.
Yeah, sure is. All right, up next is the Fear and Greed Daily interview. And today you're speaking with Daniel Fogo, the CEO and co-founder of Plenty.
Yes, as I mentioned, all about peer-to-peer lending and the other services Plenty does. It's a very interesting chat.
Yeah, sure is. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 11th of October, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.